Hello, all my dearest students of CA Final Full English. I hope you all are doing good. I hope your studies are going on great. So, today we have come over here to discuss the amendments which are applicable for your Jan 26 exams for our full English students, mainly of South India. We have already uploaded the amendment for Jan 26 in Hindi version, but as I have promised to all my full English students that I will be uploading separately for you all in full English. So, we will be doing these amendments today. So very recently, ICI has uploaded a amendment booklet on their website in the name of statutory update of around 72 pages. You can see this particular file which is of around 72 pages. But don't worry, this entire 72 pages is not new for you. Out of this, more than half of the pages are the same amendments which they have overlapped over here, which they have already put in September 25. So what ICI has done, one statutory update they have released for September 25, for which we have already uploaded a video if you remember, correct? Now what they did, they have taken those amendments and they have compiled with the Jan 26 amendments. So this one booklet covers both the amendments. It covers the amendments which were relevant for September 25, which is even relevant for Jan 26, and extra amendment of Jan 26 are also covered in this booklet itself. What I have done that you don't have time to go through all of them, all 72 pages you cannot do before the examination. So I have made a 16-page compilation of this entire 72-page file, which I have uploaded on our Telegram channel also. You can go and check in the file section. You will get the 16-page compiled file. The 16-page covers all the important amendments which are covered in this 72 pages. As far as lectures are considered, what are you supposed to do? As this file covers both amendments of September as well as additional amendments of Jan. Additional amendments of Jan I am discussing in this video, and September amendments I have already discussed in earlier video which I have uploaded 2 months back. So you can watch both the videos. If you have already watched that video, you don't have to watch that once again. You can directly revise from the book. You can directly revise from 16-page compilation. Anyone who is buying the books now, you will get those 16 pages also in our color book. All those who have bought the books earlier can download the 16 pages from our Telegram channel. I hope it is clear to everyone what you are supposed to do. I will again clarify. This is the final amendment that you have to follow, this 72 pages. To compile this 72 pages, you have 16 pages file in our Telegram channel. Okay, you can download the file from there. You can take the printout, whatever you want to do. With respect to understanding of the chapter, understanding of the video, there are two videos. One which we have already uploaded for September 25, which will cover 50% of this file, and one which we are going to discuss today. Okay, the things which we are going to discuss today are the extra amendments they have put for Jan 26, and the one which we have discussed earlier were the amendments for September 25. I hope it is clear to all of you. So this is where we stand as far as our amendments are considered. I will again put on the board and explain you so that there is no confusion. Whatever books you have purchased for May 25 or September 25 or Jan 26, you can continue to use those books. There is no need to buy any new books. You just have to add what? 16 pages amendment which I have uploaded on Telegram channel. That's it, to this book. Combination of this is fully amended. This combination is fully amended as per your examination. If you have purchased the book recently in the last few days or last 1 month, then you will get these 16 pages also in your respective books. Yes, if you have purchased the books earlier, then you may not get this because these amendments have come recently. Okay. So you check your last chapter. If you have a last chapter as latest circular in which these 16 pages are already there, then you don't have to download this and you have to do it separately. Yes, if it is not there in the last chapter, which will not be there if you have purchased the books for May 25 or especially for September 25, these 16 pages would have not been there in your books. In that cases, you can download and use it for your purpose. Okay. So as this file contains both the amendments, both means which we have done in September and which we have done in, which we are going to do for Jan 26 also. So whatever we have done in September that I am not going to discuss, that I have put over here as a cross. I have also mentioned over here that this we have already done in what? September. This we have already done in September. This we have already done in September. Whatever is new, I have mentioned as new. Whatever is done, I have mentioned it is done. This is new, this is done, this is done. You can check in the September file and September video also. I have uploaded for you all separately in English September video. So today we are only going to do the additional amendments. The first amendment is in capital gains, which is in 54 EC, where it is 54 EC. We all know that in 54 EC there are a lot of bonds which are covered to exempt your capital gains, like NHAI bonds, RECL bonds. Then there are bonds of Power Finance Corporation, Indian Railway Finance Corporation, correct or not? Now they have also added one more bond over there. Highlight this. That is Urban Development Corporation Limited bond. That is the bond of HUDCO. If you purchase the bond of HUDCO, then that is also eligible for exemption under 54 EC, along with NHAI bonds, along with REC bonds, along with Power Finance Corporation bond, along with Indian Railway Finance Corporation bond. Is it clear? So there is one addition of bond over here. That is what? That is the HUDCO bond. I hope it is clear to all of you. So the number of bonds which are now notified under 54 EC are 5 bonds. Is it clear? I hope it is clear. Let's move on to the next amendment. You will get all these things in the 16 pages. While learning, you learn from here, but while revising, you can revise directly from 16 pages. That is sufficient. Okay. Now, second. What is second? Second amendment we have done earlier. You can go and check the September 25 video and September 25 file also. We have done this also. We have done this also. You can go and check the September 25 file. This was also covered in September 25 file. This was also covered. Now, next one. If you come to page number 12, this is the new one. Okay. Now, this is a very good amendment. Pay absolute attention, all of you, what is there in this amendment. There is one section by the number 201 subsection 1A. What does this section speaks about? This section speaks about if you are not deducting TDS on time, or if you are not paying TDS on time, then the government will impose interest on you. The non-deduction of TDS on time and non-payment of TDS on time will lead to what? Imposition of interest. Similarly, this section 206C subsection 7, which is for TCS. If you do not collect TCS on time and if you do not pay TCS on time, there can be interest. So 201 subsection 1A is for TDS default and 206C subsection 7 is for TCS defaults. Now, definitely the government can impose interest. There is nothing wrong in imposing interest if the assessee is not deducting the TDS on time, not paying the TDS on time. You should impose interest. There is nothing wrong in that. There is nothing wrong if the assessee is not collecting the TCS on time and not paying the TCS on time. You can definitely impose interest on the assessee. But there was some genuine issues which was faced by the assessee. What is the time to pay the TDS? What is the due date to pay the TDS? The due date to pay the TDS is 7th of the following month. Now, there were so many assessees who have deducted TDS on time, who have also paid the TDS on 7th. They have paid the TDS on 7th. It is reflected in their bank account that it is paid on 7th. But due to some technical glitch, it is credited to the government's account on 8th, on 9th. I am deducting the TDS on time. I am collecting the TCS on time. I am paying the TDS on time. I am paying the TCS on time. It is deducted from my bank account on time. But when it comes to reflection in the government's account, it is getting reflected late. So in some cases, it is getting reflected on 8th. In some cases, it is getting reflected on 9th. So in that case, the officers are sending me notice for interest. Interest for late payment under 201 subsection 1A. Under 206C subsection 7. They are sending me notice for interest. That you have paid the interest late. Sorry, you have paid the TDS late. You have paid the TCS late. Even though the amount was deducted on 7th in my account. But it is reflected in the CBDT system, in the government system due to technical glitch late. So they are sending me interest. They are sending interest to lot of assessees. They are sending interest notice to lot of assessees. Many assessees have also paid interest. Even though it is not their mistake, still they paid. So a representation was made to CBDT by the assessees that you should do something in this. So CBDT came across this. They came to know that yes, this is a genuine problem from the department side. So we should not charge interest in such cases. So the CBDT said that we have power under 119 and they directed the Chief Commissioner and the Director General of Income Tax, and in case there is no Chief Commissioner or Director General, then they directly directed the Principal Chief Commissioner to reduce or waive the interest in such cases. To reduce and waive the interest in such cases. But subject to two conditions. Condition number 1, the payment is initiated. You have to prove that the payment was debited on time, on or before 7th. Are you clear? See, the payment itself is deducted on 8th, then so you don't have any right to ask for the waiver of interest, correct? The payment has to be deducted on time. and the credit could not be done to the government due to technical problem it was beyond the control of the deductor. You have to prove two things: the chief commissioner and the director general. And in case there is no chief commissioner, the principal chief commissioner will waive your interest if two conditions are fulfilled. You have to prove that you have to give the copy of the bank account that on 7th it was deducted, but it was reflected in your bank account, in the bank account of the department, in the bank account of the central government on 8th and 9th due to technical glitch, which was beyond my control. I am no control in that. So in that case, you have to give an exam, you have to give an application to these authorities. Assessee has to give an application. They will pass a speaking order, they will give you opportunity of being heard, and after verification of technical glitch from the bank, they will verify the technical glitch from the bank and from the operating system. They will give you refund. Okay. They will waive your interest. And if you have already paid the interest, they will give you refund also. Check please. There might be two cases that you have got the notice, you have not yet paid the interest. So they will waive your interest. You have got the notice, you have paid the interest. Now you can make an application for refund. So they will give you refund also. So if you have not paid, they will waive your interest. If you have already paid, they will waive your interest and will give you refund also. Now, by when I should make an application? There is a time limit by which you should make an application. No waiver application shall be made beyond 1 year from the end of the financial year in which interest under this is charged. So, whenever interest is charged, you have to make an application within 1 year from the end of the financial year. Suppose if the interest is charged in 23-24, you have to make an application within 1 year from the end of 24-25, 23-24. Okay. Again, I am saying if the interest is charged in 23-24, you have to make an application within 1 year from the end of 23-24. That is till 31st March 2025. Next, once the application is given to the respective authority, that is Director General, Chief Commissioner or Principal Director General, they will pass an order within 6 months. Okay, from the end of the month in which the application is received. Okay, so they will pass the order that the interest is waived, etc., etc. You cannot file any petition against this order. Whatever they will pass is final and conclusion. Please, you cannot file any petition against this. This will be final and conclusive in every sense. No petition is allowed after this. I hope it is clear to all of you. Next issue. Now there was one more issue which was arise after this. This circular came on 28th of March 2025. Pay attention on this date now. This circular came when? On 28th of March 2025. So there was a doubt which came to the assessee's mind. So will the officers start to pass the order from 28th March? Or they will only waive interest which is charged after 20th March. There is a difference between two sentences. Again, I am saying, will the officer start to pass the order after 20th March? Or they will only waive interest which is levied after 20th March. So the CBDT has clarified that also. They will pass the order after 20th March. Even if the interest is pertaining to earlier period, it will get waived. Okay. For example, if the interest is pertaining to 23-24. You have to make an application within 1 year from the end, even though the interest is pertaining to before 20th March. So, interest can be pertaining to before 20th March also. If you make the application within 1 year from the end of the financial year in which the interest is charged, in this case, you should make an application by 31st March 2025. The officer will pass the order to waive your interest. So, interest can be pertaining to earlier period also. The officer will start to pass the order from 20th March onwards. I hope it is clear to all of you. Is it clear? So this is an amendment which is there. Second amendment in this Jan 26 booklet. Now the next amendment is a very hopeless amendment, not very important practically also. Practically it might be important for some people, but academically it is absolutely not important, but still we will see. We have done this provision in our book in the chapter of assessment procedure. What is this provision all about? Let me show you. First of all, let me read that provision and recall you the provision. Otherwise, you will not understand the amendment. Section 139AA, which is for Aadhaar number. This section talks about Aadhaar. Every person who is eligible to obtain Aadhaar, if you have an Aadhaar, you have an Aadhaar number? Yes, I have Aadhaar. You have to mandatorily code this Aadhaar number in the application form for PAN. So you have an Aadhaar. Now you are making an application for PAN. So when you make an application for PAN, you mention the Aadhaar number also in the PAN card application. Is it clear? Second, when you file the return, you have an Aadhaar. Yes, I have an Aadhaar. When you file the return, in the return also you should mention the Aadhaar number. So two places you should mention the Aadhaar number as per this paragraph. One, when you make an application for PAN, you should mention Aadhaar number. Second, when you file the return, you should mention Aadhaar number. Now, for example, is it possible that when I am making an application for Aadhaar, when I am making the application for PAN, at that time I don't have Aadhaar number, I only have Aadhaar enrollment ID. For example, I made an application for Aadhaar, I got an enrollment ID for Aadhaar. I did not get the Aadhaar, I only have enrollment ID of Aadhaar. Now I am making an application for PAN. So when I am making the application for PAN, the CBDT has said that you don't have Aadhaar, na? Okay, mention enrollment ID of Aadhaar number in the PAN card application. Again, listen. By default, when you make an application for PAN, you should mention Aadhaar number. But if I don't have Aadhaar number, I only have enrollment ID. Aadhaar is not received yet. So when you make an application for PAN card, in the application form, you should mention the enrollment ID of Aadhaar. Pay attention. If the person does not have Aadhaar number, he is required to quote enrollment ID of Aadhaar form issued to him at the time of enrollment in the application form for permanent account number. Okay. So now what is the situation? I have enrollment ID of Aadhaar. I made an application for PAN. Okay. So now when I made the application for PAN, I should mention that enrollment ID. Okay. However, 1st October 2024 onwards, this particular condition is discontinued. Okay. So you don't have to do all these things from when? From 1st October 2024. So from 1st October 2024, you don't have to do all these things. Okay. But all those who have got the Aadhaar, all those who have made an application before 1st October 2024, they have to do all these things before a notified date. So what is that notified date? That notified date they have mentioned over here on 31st December. Check please. So this is the only amendment which is over here. It is for those people who have made an application before 31st October. They have to do all these things. They have to do all these things by which date? By 31st of December 2025. I'll tell you with the help of small example. One small example I will put, you will understand everything. First, I made an application. For what? Aadhaar. Once I made the application, I got the Aadhaar enrollment ID. Okay. Now I made an application for PAN. In the PAN application, I should mention this ID. Okay. Now, you have got the PAN? Yes, I got the PAN. Now, in future, you will get the Aadhaar also. Yes, I will get the Aadhaar also in future. So, whenever you will get the Aadhaar, you have to notify your Aadhaar number to the income tax department. What will be the date of, because so far income tax department only know your enrollment ID of Aadhaar. Because when you made an application at that time, Aadhaar was not there. Now, Aadhaar came after a PAN. So, you have to notify that to them. That this is my Aadhaar number, sir. Earlier, I have only told you my enrollment ID. Now, I am also telling you my Aadhaar number. So, you have to notify them your Aadhaar number by 31st December 2025. This is what the provision is all about. I hope it is clear to all of you. If you want, you can take a photograph of this, pause the lecture and take it. Okay. But not very important for exam, leave it. Okay. Now, next amendment we have done completely, that is compounding of offences. I hope it is clear to all of you what is compounding of offence. Correct? We have done in September the entire provision. Yes. Now, some amendments they have made in tax audit. In tax audit report, some clauses they have made an amendment. I will tell you all of them one by one. Accordingly, you can change in your respective books. If you have purchased the books very recently, then I have incorporated these amendments also in the books. Okay. You don't have to do anything in that case. Is it clear? Just a second. Now, in tax audit, first amendment which they have made over here is with respect to MSME clause. They have replaced this clause completely. Completely they have replaced with a new clause in which they have put 3 points. Point number 1, what are we supposed to report? Check please. In point number 1, we are supposed to report the interest which is inadmissible under MSME Act. What are we supposed to report? How much interest is disallowed under MSME Act? Only the interest portion. Only which portion? The interest portion we are supposed to report in clause number 1. Okay. Now, in clause number 2, we are supposed to report what is the total amount that you are going to pay to micro and small enterprise. Because in 43B, If you make any payment to micro and small enterprise, not medium, micro and small enterprise, then that is allowed as per 43B, if you remember, correct? That if you pay within the due date of MSME Act, it is allowed on accrual basis. If you pay after the due date of MSME Act, it is allowed on payment basis. So, what is the difference between clause 1 and 2? In clause 1, you will only mention the interest which is disallowed under MSME, only the interest portion, not the entire amount. In clause 2, you will mention the amount that is paid, total amount. I have purchased goods of 10 crore from micro and small enterprise. So, I have to mention 10 crore over here. Okay. Now, out of that 10 crore, in clause 3, there are two clauses. Out of that 10 crore, how much amount is paid as per the MSME on time? So say 6 crore is paid on time. So you should mention 6 crore here. That 6 crore is paid within the time mentioned in MSME. What is the time mentioned in MSME? In case there is an agreement in writing between both buyer and seller, then the maximum time is 45 days. And in case there is no agreement, then the maximum time is how much? It is 15 days. So out of the total purchase that I am making from micro and small enterprise, how much I am paying on time as per MSME Act and how much I am not paying on time and which is getting disallowed in the current year. So in this point, you are supposed to mention what is not paid on time and which is getting what? Disallowed in the current year. Okay. So this is how you are going to report the MSME clause now from this year onwards. So they have changed the clause over here. Okay. Now in the next clause, in clause 26, they have just written one word over here. Allowable they have put over here. There is no other mention over here. And here they have made few addition that other than for clause and for clause other than clause H of 43B. So they have mentioned 2 points over here. Whatever is highlighted, that is only the amendment. Rest all is same as what you have done earlier. So here they have put the word allowable. Okay. And here they have put this sentence and for clause other than clause H of 43B. Okay. There is no other amendment over here. In clause 31, which is for 269 SS. For what? 269 SS. Now they are saying that for each loan that you take or deposit you take, you have to mention some code and the nature of such amount. You have to mention the code, that what is the nature of that amount. For that, you have to mention relevant code. Check please. If you are receiving cash payment, you have to write code A. If you are receiving cash receipt, if you are making cash payment, code A. Cash receipt, code B. This is the code that you have to mention which was not there in earlier tax audit report. If you are making payment through not account paycheck, then C. Non-account paycheck you are receiving, then D. Transfer of asset, then E. Transfer of liability, then F. Conversion of asset, then H. Conversion liability, then H. Journal entry debit, journal entry credit, any other mode K, any other mode debit, credit K and L. So now you have to mention this code number along with your nature of transaction. Your nature of transaction can be this. Your code number will be this. You have to mention this in 269SS and 269T both. In both the section you have to mention this. Okay. One last is a freshly added clause. This is entirely a newly added clause for buyback. We all know that buyback, there is a special amendment made from Finance Act 2024 with effect from which date? 1st October 2024. With effect from 1st October 2024, what happens? That in case of buyback, the company will not pay the tax. Before that, company was paying the tax. Now the shareholder will pay the tax. Whatever amount is paid by company on buyback to shareholder, that is deemed dividend in the hands of the shareholder. Remember or not? Do you remember that? Under 222F. So whatever money company will pay to the shareholder on buyback of share, the company will not pay tax. The company will only deduct TDS under 194. The shareholder will pay tax on that as IFOS with effect from 1st October 2024 as deemed dividend. Then the shareholder will get the deduction of the cost of acquisition of the share as a capital gain loss. Remember, in capital gains, you have to write FPC as 0 always, minus cost of acquisition of the shares bought back. So this amount will always be loss. Do you remember that? This amount will always be loss. So you have to make a reporting with respect to this. What reporting, sir? First, you have to say whether assessee has done any buyback of shares. If yes, then you have to mention the amount, how much they have bought back, and also mention the cost of acquisition of the share so that you can write down how much will be the loss under capital gains. Is it clear? So two things you have to mention if you buy back the shares. If yes, how much is the amount of buyback? So that amount will go to deemed dividend, IFOS, and whatever is the cost of acquisition of the shares of the shares bought back, that will be your what? That will be your loss. I hope it is clear to all of you. So these are some of the changes which are there in tax audit. Now, next we have already done in the September. This also we have already done in September. This also we have already done in September. You can check it. Now, one last, this also we have already done in September. You can check it. Now, one last thing is there over here. So for that, I have separately recorded a video. So I will be attaching that video to this video now immediately after this session. So I'm stopping this session and I'm attaching this video separately for you all. It's a safe harbor rule which was not applicable in CA final for last 8 years. Why it was not applicable? How it suddenly became applicable from Jan 26? Everything I am saying in that video. Okay. Now we will move ahead towards the next part. Pay attention, please, all of you. The next part is the safe harbor rule, which is given under 92 CB. Pay attention, please. Now, what is safe harbor rule, sir? Pay attention. Last time it was applicable in November 2018. After that, it is not applicable. It was not applicable in CA final exams. Now, again, it is applicable from Jan 2026 onwards. Okay, Jan 26 is the first attempt. Then May 26, September 26, Jan 27, and after that in the new law, I don't know. Okay. Now I will tell you the reason why this used to happen like this, that why it was not applicable in exam. Okay. This is the rule whereby CBDT has given some businesses that if you show this much profit margin, no transfer pricing. Okay. Suppose you are a manufacturer of car. Show 8.5% profit. How much? OP upon OC 8.5%. How much? Tell na. OP upon OC 8.5. We will leave you. No transfer pricing. No need to do arm's length price. No need to compute anything at the end of the year. You should show that your profit margin is 8.5% under income tax law. That's it. So like that, they have identified 10, 11 businesses where they know that the margin is somewhere around this only. So if the assessee is showing this much margin, let's leave it. That too, it's an optional chapter, not mandatory. If you don't want to follow this, don't follow. Follow the transfer pricing provisions, find out arm's length price, correct? Yes or no? You are absolutely free to do that. But if you don't want to do all those things, and if you want your price not to be challenged by the officers, then show the margin which is set by the government. Not more, not less, only that much. A fixed margin. Around 10 to 11 business they have notified over there. So this provision came in Finance Act 2009 long back. What used to happen? Every year the government used to notify new rules. Every year. They used to make some minor changes every year in the rules. Every year. Now what used to happen? Every year they used to notify just 1 or 2 months before the filing of returns. Okay. When they used to notify? 1 or 2 months before the filing of returns. Suppose if you are following 16-17. Okay. So when you will file the return for this year? 30th November 17. So they will notify the safe harbor rule in say August 2017. Okay. Is it clear? Initially they used to notify for 3 years together. 3 years what? Together. CBDT used to notify safe harbor rule for 15-16, 16-17, 17-18. Okay. Then from 17-18 onwards, they started notifying every year. Every year separate rule, just coming 2 months before the due date of filing of return. So what used to happen after 17-18? This is previous year 17-18. Okay. This previous year 17-18, for example, will be followed by May 2018 students. Okay. And November 2018 students. Now CBDT is notifying this rule in August. August what? 2018. That is after May exams. Tell me now, please. So for May not applicable. Okay. For November also not applicable because only amendments prior to what? 6 months are applicable for exam. Are you clear? So they used to not apply every year. they used to bring in August or September, July, August, September, July, August, September, July, August, September. So it was not earlier. There was 3 years back to back. They have put one provision applicable for 3 years. So that was applicable for 3 attempts, 16, 17, 18. Then every year they are bringing new. So they was never applicable. Every time ICI used to put one sentence in the study material. Even this time they have put one sentence in the study material. You can check the ICI sentence in the study material of transfer pricing. It was a formality statement that I used to tell them that this is the formality that ICI has to do, being in your body. They have to intimate the students about this. So this is your transfer pricing chapter. Please stop talking. This is your safe harbor provision, which we will also read now. And they used to give this footnote below. Check. For 7-8 years, this story is going on. Okay. That whenever the CBDT will release, we will put on the website. Okay. CBDT used to release in August. So they cannot put on website for November. Yes or no? Now this time CBDT did what? They know that the income tax law, new income tax law is going to come. Correct? So they notified in April only. April. That too, they said that for previous year and 24, 25. Okay. For which year? Now you will file in November. Which year ITR? 24, 25 na. So they notified for both the years together only. Correct. Who will notify again for next year? New income tax law is coming na. So they have notified for 2 years together only. Then for 2 years the provision will be same only. Okay. Now it has been introduced in April. Because it is introduced in April and the exams are in Jan. It is before 6 months. So January 2026 students have to study this. Okay. Now it is well in advance notified for 25-26 also. So May 2026, September 2026 and Jan 2027 also. Students also have to study this. You are late in this world by 1 year. How many years? If you would have come 1 year earlier, you wouldn't have to face this provision. So now let's start. Okay. 92 CB. Pay attention, please, all of you. Don't talk. Section 92 CB, please stop talking. Section 92 CB has 2 clauses. Clause 1, clause 2, which talks about there are some safe harbor rules for transfer pricing. There are some safe harbor rules for section 911 business connection. I will talk about this later in the evening. Right now we are starting with this one. Okay. So what are the businesses for which the government is giving a safe harbor? Safe harbor means a percentage, a safe percentage. You show that much, we will accept your price. We will not do anything. Okay. Don't get confused with this with advance pricing agreement. Okay. Advance pricing agreement is separate thing where you have to go to home, CBDT, pay some fees. There, they are not telling you any margin. There, they are telling you what? Arm's length price or manner. Correct? Advance pricing agreement, any business can go. There is no restriction in business. Safe harbor, they have mentioned few businesses. Are you clear? Shall we start? I will be dealing all the things from the ICI material only, whatever ICI has released, which I have put in our book also. Okay. Pay absolute attention, please. Page number 44.26. See on the board, please, all of you. Can read it from the board or you can open your book if you have. Everybody has to learn from here only. Okay. Recording students I am talking to. Jan 26 students will also learn from here. May 26 students will also learn from here. September, Jan 27, regular batch, fast track batch, free students, paid student, everybody. Okay. Will learn from here only. I am not going to record this 2 times. The determination of income referred to in. I want your absolute attention and your contribution in this provision, please. Okay. I have worked very hard on this provision. You will not get the explanation that we are going to do ever nowhere in the entire country, that I can say for sure. Okay. You just see the level of interpretation that we are going to do in this chapter. I have already taught this in CA Final 8 years back. I have also done this for CA Final International Tax students earlier. I am aware of exactly what is there in this. There are a lot of mistakes also in this rule, which they have not rectified for last 8 years. Even today, those mistakes are there. I will highlight those mistakes also to you all today. Okay. Read the Bare Act. First of all, we used to only read the Bare Act since last attempt, till last attempt. And then that's it. Whenever the CBDT will notify, we will talk. Okay. And I was aware they will not notify. I was aware that even this time they will not notify. But surprisingly, they have notified for both the years together. Once and for all, they don't want to notify next year again the rules. Because next year they will be more interested in notifying what? The rules of the new Income Tax Act. They don't want to have any confusion regarding the rules next year. So they notified for both the years together only. The determination of income referred to in clause 1 of subsection 1 of 9. We are not talking about this as of now. We will talk about this in the evening. This also they have notified in the month of say January or February 2025 only. This point number 1 also. This was also not there earlier. The determination of arm's length price, I am interested. The determination of arm's length price under 92C or 92CA shall be subject to what? Safe harbor rules. The board may, for the purpose of subsection 1, make rules for safe harbor. For the purpose of this section, safe harbor means circumstance in which the income tax authority shall accept the transfer price or the income deemed to accrue or arise under clause 1 of subsection 1 of the section 9 as the case may be, as declared by the SSC. What are safe harbor, sir? Which businesses are covered, sir? We will see all the businesses one by one. Pay attention, please. Okay. Come to page number 44.33 and 34, please. I will tell you at the end which all things you have to remember. I'm not giving any guarantee, but 99% only those questions will come in exam. Till the time safe harbor was there in the exam, every attempt ICI used to ask one question. Every attempt. I'm very sure in Jan 26 they will ask one question on safe harbor. It was one of the important provisions of the exam. Now, what is the first eligible international transaction over here? See on the box on left hand side. Shall I read? Provision of what? Louder. Software development services referred to in item 1 of rule 10 TC. If you are engaged in what? Software, put in the box. Software development service. How much margin they want in case of software development service? First of all, what do I mean by software development service? Check here, please. There is a definition over here. Software development services means. Are you ready? Sure. Sure. It's easy, don't worry. Okay. Academically, it's easy. Practically, it is very technical. Yes, we are doing the definitions just for better understanding. Nobody is going to ask you definitions in examination. Okay. Generally, they directly ask, put the line, the SSC is engaged in providing what? Software development service. Okay. Still, we will do analysis, okay, of each and every definition to the extent you all can handle it. Okay. So, I've done some exercise. I've written some simplified meanings of each and every term over here. Software development service means business application software. I'm making what? An information system development using known methods and existing software tool. Example, creating a simple what? Payroll system for your company. You have told me that make what? A Payroll system. I am providing you services with respect to making of payroll system. Are you clear? Nobody is going to ask you this. Okay. But it is better that we understand something out of it. When it becomes very technical, we will not get into that. Okay. But to the extent we can understand, let's try. Software development system means support for existing system, helping maintain a company's current accounting software. So for your accounting software, there is some supporting software which is required. Okay. Without which your software cannot run. So I am helping you to maintain that. Converting, this third one is very simple. Converting or translating what? Computer languages into readable languages, correct? There is a software which I am making which will convert the computer language into what? Like CBDT. Like CBDT takes all the ITRs in XML files, correct? So they have to convert that into some readable language or not. There might be some software now for that. Somebody would have made that software, correct? So if you are engaged in providing the services with respect to that, you are eligible for safe harbor rule. Are you clear? Next, adding user functionality to application program. I am adding some functionality. Suppose there is a website. I want my website to add some functionality on that. Earlier in my website, there was an option to add to cart, then go to cart, and then buy it. I said that who will do so much to my team? Put one option directly, what? Buy now. What? Directly buy now. If a student wants to buy only one product, which generally a CA student will only buy one product only na from my website. He is not coming to Amazon to buy soap, shampoo. Yes or no? Where he will add to cart. Correct. I said remove add to cart or keep add to cart and give an option of what? Add functionality to my software. Are you clear? Check please. Like that. Can you add functionality to your big softwares in your companies? I am engaged in providing you that user functionality. Are you clear? I put over it like adding report generation. Okay. I want this report, payroll report. I want stock report. Add this option. This option is not there in my software. Add stock report. The moment I click, I should get the stock details in one click. Are you clear? Similarly, debugging of software. What do I mean by debugging? Removing bugs from the software. If there are bugs in your software, I am removing them. That can also be called as what? Software development services. Adaptation of existing software. It means what? Modifying a software to work both on, say, MacBook and Windows. Are you clear? I am adapting your software to such an extent that it can work on different operating systems, different computers. Are you clear? Preparation of user document. What do I mean by that? You have software. I am making the manual of that software for you. What am I making? Manual. How to use that software? You don't know that. I am making user manual for that. Check please. Take a photograph of this if you want for your understanding that what all things I have written over here. Or you can write down over there beside that. Just for your understanding. Don't do this all this for examination. You can do this in color book also. Color book also has all the definitions. Ultimately, you will read from there only. But does not include what? Any research and development, whether or not. I am not doing any research and development for you. I am only doing what? Providing software services to you. I am not doing any R&D for you. For R&D, there is a separate safe harbor rule. Okay, separate category is there below. You asked for a software, I made a software for you. R&D, I am not doing. Then how much margin they should maintain so that no questions are raised by the officers. Come now. Please pay attention now. What is important for you is to remember the margins. Okay, beta? Try. You will be able to, don't worry. One or two margins are slightly difficult to remember. Rest all are same, only most of them. The operating profit margin declared by the eligible assessee. Who is eligible assessee? No, 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 no. Oh. Who are you to say who is eligible assessee? Huh? Lucky? TBDD you are. Rule 10 TB. See on the board. Stop talking, please. Subject to the provisions of sub rule 2 and 3. Eligible assessee means a person underlined who has exercised the valid option. You cannot get this by default. You have to exercise a valid option for application of safe harbor in accordance with rule 10T, and then you enter into what? Software development service. Are you clear? They have listed all the different kind of services over here. Now come back to margin, please. I am interested in margin. Margin you have to remember. Provision of software development service. The operating profit margin declared by the eligible assessee from eligible international transaction in relation to operating expense. That is, they are talking about what? Write down over there. OP upon OC. What? OP upon OC. OP upon OC into 100 should be how much percentage? Beta, please pay attention. Shall I read? Is not less than 17%. How much? Where the international transaction does not exceed what? Say na loudly. So if the transaction value is up to 100 crore, your margin should be 17%. And if the transaction value is more than 100 crore and up to 300 crore, then your margin should be 18%. Check, please. They will give you in the exam OP separately, sales separately, compute OC by taking a difference. They will give you transaction value, find out margin, and check whether you are eligible for safe harbor or not. Are you clear? What all data they will give you? OP they will give you from sales or cost, any item they will give you. Next item you find out, correct? OP they will give you, sales they will give you. So sales minus OP will be cost. Find out margin. Then check what is the value of transaction. If it is up to 100 crore, your margin should be above 100 crore, up to 300 crore, your margin should be 18%. What about if your transaction value is more than 300 crore? Louder. Safe harbor not applicable. Write down there only. So it's only applicable. Color book, do everything, please. Ultimate, or else you can do right now from here. Then you can later on rewrite it. Okay, if you want. Ultimately, you will read from there only. Is it clear? Clear, please, all of you. Don't talk. Sir, what is OP, sir? Sir, what do you mean by OP, sir? What do you mean by OC, sir? Come above. Definition is there. A, B, C, D, E, F, G, H, I, J, K, L, M, N, O. Operating expense has a definition over here. What you will take in operating cost? Again, I am saying they will directly give you the data. In case they don't give you, They feel that May 26 students are very special for us. Okay. We should not give them the data directly. There are very intelligent students like Lucky, Tarun. Yes, we should test them in depth. So what? In that case, what you will do? You need to know the definition of what? Operating expense now. Please stop talking now. Here, this is your denominator. Okay? Yes. Let's talk about denominator. Then we will talk about numerator also. Okay? Operating expense means the costs incurred in the previous year by assessee in relation to international transaction during the course of its normal operation, including bracket, cut that 23. I have taken all these things from Bear Act. So that 23 was having some reference in the footnote. Cut that, please. Sorry. Please stop talking. Please. Please. Please see here. I am in India. I am providing what? Software development services. Where is the other party? Outside India. Is it my associate enterprise? Yes or no? Otherwise, why we will do all these things? Correct? First transfer pricing should apply or not? Yes. So they have given us contract for some software development. We said that the transaction value will be 150 crore. Safe harbor rule applicable? Louder. Yes. Now we need to find out what? Operating profit upon operating cost of this transaction. Correct? Operating expense means the cost incurred in the previous year by the assessee, that is by Indian entity, in relation to international transaction during the course of its normal operation, including bracket costs relating to ESOP. Underline. Costs relating to what? ESOPs or similar stock-based compensation provided for by the associate enterprise of the assessee to the employees of the assessee. Underline properly. Who is giving ESOP? Am I giving or the other party is giving? Other party is giving what? ESOP to my employees, correct? Include that also in the operating expense. Okay. Include that also in the operating expense. Otherwise, you will tell the other party that don't pay me this much money. Pay me what? Give ESOP to my employees. Include that also as your cost. Okay. Comma. Reimbursement to associate enterprise of expense incurred by associate enterprise on behalf of the assessee. Okay. Please highlight all of them separately, please. This is separate discussion. Correct? This is separate discussion. Let's highlight this separately and talk about it now. What is this? Associate enterprise might have incurred some expense on my behalf, so we are reimbursing them, correct? For this project only. I'm not talking about other expenses, okay? For this project, some of the expenses they would have incurred, so I'm reimbursing them. Take that also in the operating cost. Is this clear? This is first. This is second. Now third. Third one. Amount recovered from. Third point is this. Let's read properly. Amount recovered from associate enterprise on account of expenses incurred by assessee on behalf of those associate enterprise. So whatever they have incurred on our behalf, we are including. Whatever we have incurred on their behalf and what they are reimbursing to us, that also we are including. Are you clear? So there are three types of transaction expenses which are specially included in operating expense. Please tell me, don't see the book. If the associate enterprise is giving ESOP to my employees, whatever is the cost, we have to include in the operating cost. Okay. Then if he is incurring some expense, we are reimbursing. That include. If we are incurring some expenses, they are reimbursing. That also include. And from here onwards, the normal expenses will come, which relate to normal operations of the assessee, and depreciation you take, amortization you take, relating to assets used by the assessee, but do not include what? The following expenses. Mainly these are financial expenses, okay, or amortizations. What is not included? Check please first. Don't take interest expense. Then provision for uncertain liability. Then don't take pre-operating expenses. Loss on arising on foreign exchange fluctuations. Don't take extraordinary expenses. Don't take losses on transfer of assets and investments. Okay? Investments don't take. Don't take income tax expense. Okay, don't take income tax in the denominator. Don't take other expenses not relating to what? Normal business operation. Wait now. Okay, wait. Is it possible to do this project? I have outsourced my employees to someone. It means I have taken employees on outsource basis. Am I supposed to pay them some cost? Should I include that also in the operating cost? Now wait. Listen carefully. This project is of 150 crore. I need 500 employees for this. So I don't have employees on my payroll. So Arun Limited is a employee providing agency. So I have taken 500 employees from him for 5 months. Will I pay him some 10-20 crore rupees? I paid him 20 crore rupees. Are you clear? Now, in that 20 crore rupees, Arun is not telling me. Arun is not telling me how much he will pay to employee and how much is his profit. Are you clear? If Arun gives the breakup, then take the employee cost in the total cost, not your service cost. Are you? If Arun tells me that 20 crore is the total fees I will take, 15 crore is employee cost. Take 15 crore in the employee cost over here. But if Arun doesn't give the breakup, then take 80%. How much? 80% of the total amount paid to Arun as the part of employee cost. Check the proviso below. Provided that reimbursement to associate enterprise of expense incurred by the associate enterprise on behalf of the assessee shall be at cost. Provided further that amount recovered from the associate enterprise on account of expense incurred. Provided further that the amount recovered from associate enterprise on account of expenses incurred by the assessee on behalf of associate enterprise. Wait, we will read again from here. That 80% clause will come after some time. First read this paragraph. Provided that reimbursement to associate enterprise. What we are reimbursing to associate enterprise? We are doing some reimbursement here. Where we are doing reimbursement? Second point, correct? Incurred by the associate enterprise. That employee cost will come in the next definition. Wait. Reimbursement to our foreign entity of expense incurred by the associate enterprise on behalf of the assessee shall be at what? Cost. It means if the associate enterprise has incurred 50 crore for us, we should only give them what? 50 crore. We should not give them what? Extra margin on profit. Don't give 60 crore. Only take cost in reimbursement. So please relate this with an arrow, please. This point number 2. Even the amount which you recover, from whom? From the associate enterprise. On behalf of them, you are incurring some expenses. That should also be done at cost. That 80% cost will come in employee cost after some time. Just wait. Employee cost is defined separately over here. Where is employee cost? Yes, here. When we will take the total cost of the employee, that time we will talk about it. So what does operating expense include? Don't read. Without reading, tell me, please. First, all the normal, no, don't start with ESOP directly. First, you will take the normal expenses to provide the services, correct? All the normal expenses that are necessary to provide the services, you will include that, okay? Then 3 special cases. Which cases? ESOP provided by whom? Associate enterprise to our employees. Include that. Then reimbursement of that we are doing to them and they are incurring expense. That should be done at cost. If they are incurring 50, if we are giving 70, take only 50. You can give more, but in the cost, you will take only how much? 50. Then reimbursement of recovery. That also should be done at cost. Then you take all other normal expenses like depreciation, you can take other expenses you can take, but don't take certain financial expenses and you can say amortizations. Okay. What is operating revenue? Once we know operating revenue and operating expense, then the difference between the two will be called as what? Operating profit. So operating revenue is more or less same only like operating expenses. Check please. It means the revenue earned by the assessee. AC thoda kam karo. Ya mera pankha chalu kar do. AC mach. The revenue earned by the assessee in the previous year in relation to international transaction during the course of its normal operation. Including what? Same. Cost relating to ESOP or similar stock-based option provided for by the associate enterprise. But not including the following. Same things are not included. Extraordinary incomes are excluded here. The way there are extraordinary expenses which are excluded. Interest income don't take. Again, profit on foreign exchange fluctuation don't take. Similarly, profit on transfer of investments don't take. Refunds of income tax don't take. Can you see that this is all opposite of all expenses? Provisions, write back, extraordinary income, any incomes which are not related to what? Normal operations. Now, what is operating profit margin? See here, please. We want what? A margin, na? What is the margin? Don't read without telling what is the margin. Something which is, what can you call as a margin? Sale minus cost, na? The previous two different definitions, when you will difference, take a difference of the previous two definition, you will get margin or not? Check. The operating profit margin in relation to operating expense means the ratio of operating profit being the operating revenue in excess of operating expense. This is your numerator, correct? To operating expense. This is your denominator. This is nothing but your OP upon OC, which is expressed in terms of what? In terms of a percentage. Okay. Now come back to this this safe harbor now. So in first business, what should be our margin? OP upon OC 17 up to 100 crore, 18 up above 100 up to 300. Please by heart. Second business. What is the second business? Information technology enabled services you are providing. Okay. Now see on the right hand side. Check the margin. Same. Is it same? Not same. Somebody is saying it is not same. Circle aggregate. There it was not aggregate value written. Okay. Here they are mentioning what? This is the only safe harbor out of all the cases where they are using the word aggregate. If you want to note this, you can note down at your end. You can check all other safe harbor. Nowhere they are using the word aggregate except this case. Margins are same, I agree. Okay. Third one, very dangerous. Pay absolute attention on the third safe harbor. What is the third service? We will go to the definition after some time. What is the third service? Say na loudly. Knowledge process out. What is knowledge process outsourcing? Tell me. If you don't want to learn technical definition, at least basic definition, so you should know now what you are doing. What is knowledge process outsourcing? Yes, madam. Back-end one are not knowledge processing outsourcing. That is your normal business processing outsourcing. Yes, something very technical you are outsourcing to someone. Some big aspects on the business. Generally, what we outsource? Call center, service center. Yes or no? Those are considered to be normal BPO services. Here we are not outsourcing normal BPO services. Here we are outsourcing some very important part of the business to some other entity. Are you able to understand? You want to read? Read the definition, please. Come here. Knowledge process outsourcing means following business process outsourcing services provided mainly with assistance or use of what? Information technology requiring application of knowledge. Here you require what? Application of knowledge. It is not a call center or service center where there is no great skill which is required. Okay. Application of knowledge. The other entity will do analytical analysis for it. Technical skills has to be there with them. It is not an outsource of a normal activity. It is an outsource of some important function of your business. Like, namely, they have illustrated few of them. Geographic information system, human resource services, engineering and design services of your company, animation, content development and management, business analytics, financial analytics, market research. Again, we are not doing any R&D for you. We are only providing these services for you. The difference between a normal outsourcing and KPO, in KPO, you are outsourcing some important functions of your business where require some technical skill, knowledge, application by the other company. Okay. They are not handling your incidental activities. They are handling your main activities in the business. So if you are doing this, if you are engaged in this, you are a very technical company. You are handling APO services of many other companies. Okay. Do you need skilled employees for that? Tell me now, please, loudly. Do you need skilled employees for that? Yes. What should be the safe harbor? Dangerous safe harbor it is. You have to be very careful with the percentage. First two was very simple. 17, 18, 100, 300. That's it. Third one, careful. 3 slabs are there. How many? 3 slabs. The value of international transaction does not exceed how much? Underline. First, this safe harbor is only applicable if the value of international transaction is up to how much? 300 crore. And the margin, wait. And the operating profit margin declared by assessee, eligible assessee from eligible international transaction in relation to operating expense. See here, see here, see here. That is your OP upon OC or OE. OE doesn't sound well. That is the reason I'm saying OC again and again. Okay. We'll say again and again OE, OE, OE. That is the reason I'm saying OC. Okay. But technically it is OE. Wait now. Transaction value should be up to how much? Not more than 300. More than 300, safe harbor not applicable. Go follow transfer pricing. Okay. Now, first point. OP upon OC is not less than. Tell me now loudly. Circle and one more parameter is there. And employee cost in relation to total operating expense is at least 60%. How many parameters? If you want 24%, for 24%, what you have to do? First of all, the transaction value should be up to 300 crore. And your employee cost should be up to how much? 60% of your total cost. Are you clear? You will check employee cost upon total cost. Plus, you will check transaction value is up to 300 crore. Then you can get the advantage of 24%. Are you clear? Shall I go ahead? It will come down to 21%. Good or bad? Good or bad for you? Good? As an assessee, it is good or bad for you tax perspective? These are not your actual margin. I am talking about you should show this much. It is good or bad as a tax assessee? Good. You have to show lesser margin, correct? But for that, your employee cost in relation to operating expense should be how much? 40%? Tell me now, please. 40% or more, but less than 60%. Check, please. Is it clear? Check properly. Don't see the third point. I heard the first and second. First, it is 24, 60. Second, it is 21, 40, 60. Correct. Now, there is point number 3. Let me see what do you have to say on this. Point number 3, what is percent? Louder. 18%. And employee cost in relation to operating expense. How much? Does not exceed 40%. Check, please. Checked? Ask something now. If my employee cost upon total cost is exactly 40%, can I come here? Can I come here? Say only that much. Basic mathematics I am asking. Can I come here? Yes, it is written 40% or more. If my employee cost upon total cost is exactly 40%, can I come here? Yes, I will come in both. Don't ask me. Ask. CBDT. Check. Tell me the rule number. After 8 years, I rechecked it. Have they rectified this? Yet no. 8 years back, I used to say that there is a mistake. Even today, there is a mistake when the employee cost is exactly, it is coming in both the case. Rule number, tell me. 10 E. I don't talk, please. You are only for observing that because you are minutely reading. Otherwise, you will not. Don't check the proper number also, yaar. What? Which rule number it is? D, na? Safe harbor. Don't talk, please. Check second one and third one. Ask CBDT, not me. Okay. There's a mistake. Sir, what to do in exam? No exam, nobody will ask you such things. Okay. Which are contradictory. Correct? You can do anything. Your choice. Take 20, take 18. I will take 18 only, na. Why will I show 21? If I'm coming in both the case. Correct? As an SSE. Yes or no? Show 18. Your choice. Shall we go ahead? Come back to the definition of now. We will see employee cost. What we will see? Employee cost. Please stop talking. Again, I am saying they will not ask you the definitions. They directly used to ask in the exam, they used to give. See, even this has come after so many years in the syllabus. So initially they will be very lenient with respect to this provision, according to me. But still, let's see whatever is there in this provision properly only. Let's not take any risk. High chances that a question might come for 5 to 6 marks from this particular part. And if it comes, it is very simple. It is very, very simple. You just need to know the percentage. That's it. You have to do OP upon OC. That's it. The answer is done. In 2 minutes, the answer can be computed. They can also ask in MCQs now. Okay. Multiple one case study they will make and they will ask you multiple safe harbors in one question only. Correct? Employee cost includes all those simple costs which we are already aware of in our chapter of salary. What is the first one? Salary, wages. You will take gratuity. You will take contribution to PFs. You will take all the perquisites. You will take employee related allowances like medical allowance, dearness allowance, travel allowance, any other allowance. Okay. Let's say now bonus commission by whatever name called, lump sum payments which you make to employees like pension you make, VRS, correct? Gratuities, severance pay. What is severance pay? Retrenchment compensation is called as severance pay. Expenses, then point number 8. Expenses incurred on underlying contractual employees are also covered over here. Check. Which employees? Contractual employees. If you have hired some contractual employees for this project, okay, to perform what? Similar tasks. Then point number 9, mark down please. Outsourcing expenses. Now you don't have your employees. That 80% which I was saying now was actually covered over here. You don't have your own employees. For this project, Arun is providing me employees. So I'm paying around 20 crores. If I'm paying around 20 crores, I need to know the breakup of that. Okay. Check below. Provided where the extent of employee cost embedded in the total outsourcing expense is not ascertainable, then take what? Underline 80% of the total outsourcing expense shall be called as total outsourcing expenses. So in outsourcing expense, I cannot take the full amount charged by Arun. I will only take the employee cost. If Arun is telling me the breakup, I will take that. If Arun is not telling me the breakup, then I will do what? Consider 80% of what Arun is charging as employee cost, assuming 20% is his margin. Okay. Then recruitment expenses can also be part of employee cost only because employees are recruited. That is also a part of cost of company. Relocation expenses, if you are shifting employees from one, training expenses, staff welfare expenses, any other expense related to employees or employment. They are not listing down the name now. It is a general list. So this is where we stand as far as our safe harbor rule is considered as of now. Okay. One last thing I am saying for today. Rest will continue in the evening, the safe harbor discussions. Next one. Please see here. How many services which we have seen? All of them are services so far. None of them are businesses. Okay. First service was software provision of software development services. Are you doing R&D for them? No. R&D will come later on. Okay. In 9th or 10th business, it is there. Second one. Provision of IT enabled services. Okay. Third one. Provision of KPO services. Knowledge process outsourcing where you require some technical skill, analytical skill, etc. Correct? It is not a normal call center or service center. Is it clear? Now the fourth one. Very important service. Advancing what? Put in the box. You are giving what? Intra-group loan, so you will charge what? Tell me now. Interest you will charge now. The government will tell you how much interest to charge. If you charge that much, no transfer pricing. But wait. Advancing of intra-group loan referred to in item 4 of Rule 1010 TC, where the amount of loan is denominated in which currency? Put in the box. INR. First of all, we need to know the definition of what is intra-group loan. Now, this definition is very important for exam. They used to test this definition in the exam because it was a smaller one. It was not a very technical one for you to understand as a commerce background student. Okay. This definition contains the terms which are commercial terms. Okay. Commerce related terms, not science related terms. The terms which were used over there were all technical terms for our background. Yes or no? Intra-group loan means, put in the box very careful. It means loan advance to, put in the box, associate enterprise being a non-resident, where the loan is not advanced by an enterprise. We should not be what? We should not be financial company or banking company or money lending assessee. Check please. So this safe harbor is not for banks. Are you clear? And it does not include circle credit line. What do I mean by credit line? No, it is something like overdraft, where I am giving you a limit. Okay. It should not be like that. Okay. Or any other loan facility which has no fixed term for repayment. Overdraft does not have any fixed term for repayment. Whenever you will repay, interest will stop. Yes or no? So there has to be a fixed, it should be a proper loan, which comes with a proper tenure. Correct? And it comes with a proper limit. That this is the loan 10 crore we are giving you. That's it. There is no line of that particular loan. In that case, wait. I am the lender. Correct? Who is the borrower? Non-resident associate enterprise. Say that please. Otherwise, it will not come in the definition of what? Please tell now. Intra-group loan, it will not come. Correct? We are giving the loan in which currency? INR as of now. Foreign currency will come in the next point. Okay? INR. So how much interest should I charge, sir? Wait. That depends upon the credit rating of the borrower. What? Credit rating of the borrower. Whose credit rating? The borrower's credit rating. Depending upon that, you charge them interest. Did you understand? Come. Check now. Interest declared in relation to is not less than 1 year MCLR of SBI. What? 1 year MCLR of SBI as on the 1st April of the relevant previous year. Relevant previous year will be the year in which you are given the loan. Are you clear? Plus, suppose SBI MCLR is 8%. How much? 8 plus 175 basis points. Plus what? It means how much? 1.75%, where the associated enterprise has credit rating between AAA to A. Did you understand? Who will give this AAA to A rating? A credit rating agency. Are you clear? Next. MCLR plus, where the credit rating is BBB minus, BBB plus. Check please. Are you clear? Remember, you have to say no. Next, fast, tell me. Read from here, 475 and all. Read here, directly 4.75. Check here. Don't talk, please. Don't talk. Third. SBI MCLR plus 4.75%. If it is BB to B, 6.25. It is C to D. And listen carefully. Last point. 4.25% where there is no rating. But in that case, the loan should be less than equal to 100 crore. In last case, the loan should be less than equal to what? 100 crore. It cannot exceed 100 crore. In all the cases, the loan can be any amount. Aggregate loan amount up to 31st March 2026. Should be up to how much? 100 crore. If it crosses 100 crore, and if the company, if the borrower does not have rating, safe harbor rule is not applicable for you. Did you understand what I said? By heart, these 4 cases. 4 means 1, 2, 3, 4. First, should have born 1 year before. Correct or not? Yes. 1 year late. Done? No. Then do. What if they ask this for 20 marks? Huh? September. Huh? September then? January? Income tax 2025? No, na? 30 then. 30. September? Okay, September? September? Jan? Income, you want experience of new law also? Next batch? No, na? 30 then. By heart. I will ask you in the evening individually. So how a question will be framed? Somebody has asked. The question will be framed by giving you the data which is there in the provision. That's it. Like they will tell you the nature of service. They will tell you OP. They will give you sales. They will also give you transaction value. Yes or no? And then they will ask whether safe harbor can be exercised by this assessee or not. You have to tell, looking at the margin. Okay. If the margin is exceeding, he cannot. If the margin is within that percentage, he can. Is it clear? Like in KPO service, they will give you multiple data. In KPO service, they will give you the nature of service. They will give you OP. They will give you OC. They will also give you the employee cost. Yes or no? They will also give you the transaction value. Correct. They will put all these things. So far, they have tested only simple one, only like 17%, 18%. They have not tested any great provisions from this particular part of the syllabus earlier also. Now, I don't know 8 years back who were the members of the board of studies. Now, who are the members of the board of studies? We never know. Arey, please stop talking. Done. See, only you have to handle these 2 points, please. Rest of them are very straightforward. You can check. Can you see that? Only handle this borrowing wala part, lending wala part, this credit rating wala part. Rest of them are, see, all of them will complete in 10 minutes. It is directly the margin given. And most of them are OP upon OC only. Check. Can you see that? Most of them are. The percentages might be different, but most of the margin ratio is same only. Only KPO you have to pay attention. Which one? KPO, that is different. Correct? And this advancing of intra-group loans. Okay? We will try to buy hard, don't worry. Let's go ahead with the next part. 5th point. Advancing intra-group loans in what? Foreign currency. So what should be your safe harbor? What should be the minimum interest that you should show so that the government does not raise any question on you? Shall we start? Interest is not less than the underline reference rate. Hey, don't say RBI and all, please. Stop. Just underline it. Okay. Interest rate is not less than the reference rate as on 30th September of the relevant PY plus. Now there are 2 parts. Circle point number A, point number B. Point number A is applicable if your loan amount is up to 250 crore and point number B is applicable if the loan amount is about 250 crore. Is it clear? In the Indian currency, there was no segregation like this. Okay. In the Indian currency, there was no segregation up to 250 crore or more than 250 crore. But here there is a segregation up to 250 crore. The loan amount, the interest rate is different. Above 250 crore, the loan amount, the interest rate plus the extra margin that you are going to add, that is going to be different. This is the most complicated one out of all of them. So if the loan amount is up to 250 crore, it will be the reference rate plus what? 1.5%. If the rating is triple 1A, double A plus, double A minus, the A plus, A minus. Okay. It is reference rate plus 3%. If it is triple B plus, triple B minus. And plus 4% if it is double B plus, double B minus, B plus, B minus, C plus, C minus, D or no rating. So many rating category check, please. Okay. If they will ask in a closed book exam, yes, it is a difficult task to remember. Correct? In open book, it is easy. Yes, in paper 6, if they ask, then it's okay. They may ask you in paper 6 also. Be careful with this provision. More likely that such provisions, at least from the safe harbor, they will ask you in paper 6. Yes, the simple one, OP upon OC, they might ask you in the paper 4. Point number B. If the loan amount is greater than 250 crore, then it is 1.5%, 3%, 4.5% and 6%. It is increasing by 1.5%. Then it is increasing by another 1.5%. Then it is increasing by another 1.5%. Just try to remember like this. In the previous case, it is increasing by 1.5. Then it is 1. Okay. So you have to close your eyes and you have to recall the things. 1.5, 3, 4. 1.5, 3, 4.5, 6. Okay. Then the right hand side rating you can remember. Triple A, double A plus, double A minus, It is exactly same as the first one. Second one is also exactly same as the second one, which is there in point number A. Check. Third one is segregated into 3 and 4 year. Check, please. Third one is till B, it is 4.5. And from C and to no rating, it is 6%. This is one of the trickiest one to remember out of all of them. Even the previous one were not that trickiest. Even the next ones are very simple. Those are very, very straightforward. So you have to pay absolute attention on this one at least. Okay. Take a screenshot of this in your mind. Okay. You have to do that. If you want to remember. If you don't want to remember, that is your choice. Okay. Chances of coming in exam less. This one at least less. They should not ask in so much of memory is required where it is to remember. Okay. There is no great application here. It is only about what? Memory skill. Now you will ask me what is reference rate. Okay. I'll show you what is reference rate. But I will again not recommend you to what? Remember what is reference rate. It is again complicated. For the purpose of this sub rule, do you want to remember this reference rate? Come. Yes. Go through it once. For US dollar, 6-month term secured overnight financing rate currently administered by Chicago Mercantile Exchange and increased by 45 basis points. For euro, 6 months euro interbank offered rate currently administered by European Money Market Institute. For UK pound sterling, 6 months sterling overnight indexed average called as Sonia. What? What it is called as Lucky? Lucky. Sonia. Currently administered by ICE Benchmark Administration or Refinitiv has increased by 30 basis points. For Japanese yen, 6-month Tokyo term risk-free rate, TORF, currently benchmarked by Quick Benchmarks. For Australian dollar, BBSW. For Singapore dollar, SORA. Okay. You want to remember then. Okay. Don't remember all these things. Not possible also for you to remember. They will give the reference rate in the exam. If they don't give, write in the exam, I don't want what? 100 out of 100. Okay. I don't want 100 out of 100. It's okay. 98 is fine. I'm okay with 95, 96. Who will remember all these things? Not possible practically humanly for us to remember, yaar. Out of so much. Only if safe harbor exam is there, then we can go and remember. Yes. Along with so many things, not possible. Come to the next point. Very important. They have been asking this lot of times in the exam earlier in 2015, 16, 17, 18. Very important it is. Corporate guarantee. I am giving guarantee to my associated enterprise. Will I take commission from them? Are answer na? Yes. So how much commission I should take? First of all, we will learn the definition of corporate guarantee. Important definition it is. What is corporate guarantee? Shall we see? Put in the box. Very important definition. Whatever definitions I am telling you, please remember. So far, at least remember intra-group loan, corporate guarantee. These two definitions you remember, please. OP, OC, they give in the exam. Okay. Corporate guarantee, important definition. Come here, please. What is corporate guarantee? Page number 31.9. Or if you want to see from textbook, then textbook. I will be reading from textbook. You can refer the color book. It's okay. Okay. Because in the textbook, I have mentioned few points for you all so that you can also write down the meaning of certain terms. First, let me read. Corporate guarantee means explicit corporate guarantee. Circle explicit. Explicit means a guarantee which is clear, which is written. I am giving you written promise. Which promise? Written guarantee on paper. That is called as explicit guarantee. Corporate guarantee means corporate guarantee extended by company, circle or underlined to its wholly owned subsidiary only, not all associated enterprise. Are you clear?
Intra-group loan was to whom? Non-resident associate enterprise. It was not only wholly owned subsidiary, correct? Here it has to be wholly owned subsidiary only. Are you clear? Again, the other person, the borrower has to be what? Non-resident. Circle, the borrowing can be short-term, long-term. I can give you guarantee for long-term borrowing also, short-term borrowing also, but it has to be explicit guarantee. Further, they have put an explanation below. What it does not include, okay? Even though the definition gives me a lot of criteria clearly, it has to be explicit, written. Still, they are giving a clarification in the form of an explanation. Few things will not come in corporate guarantee. Let's read. For the purpose of this clause, explicit corporate guarantee does not include, underline, what? Letter of comfort. Sir, what is a letter of comfort? Underline first. You are my borrower, 100% subsidiary. Okay, you are doing some project. Okay. Now your client wants some guarantee that whether you will complete the project on time or not. Okay. So I'm going to say a bank and I'm taking a letter of comfort and giving you. Letter of comfort means this is my child. I am the parent. I am there. Okay. I am there. If something happens, then I am not there. Are you able to understand? I am just giving you a comfort that there is something big behind this particular person who is doing your project. Are you clear? I am not going to face any consequence if he doesn't anything wrong. It is just that there is someone who is a parent company who has been into this field for a lot of years, is observing the project. Don't worry. This is letter of comfort. Letter of comfort does not give any financial commitments. Are you clear? It's an oral commitment. Okay. Similarly, it does not include, underline, implicit corporate guarantee. What is implicit corporate guarantee? I am not giving any guarantee in writing, oral guarantee. I am just making a promise. Okay. Sometimes if Reliance Industry even say few words, okay, that words will also make lot of importance in practical life. Yes or no? Because it is Reliance Industry. It is not a word given by some normal person. Yes. So an oral commitment, unwritten, assumed promise. It is assumed that if Reliance is the parent and there is a subsidiary 100%, it is assumed. If something goes wrong with the subsidiary, it is the Reliance whose name will get spoiled. Yes or no? So I am giving you an implicit guarantee. Implicit guarantees are not covered in this particular safe harbor rule. Performance guarantees are not covered. Which guarantee? Performance guarantee. This is another kind of guarantee where I give a guarantee that if he does not perform, I am there now. Don't worry. Okay. Let him do the project, please. Again, performance guarantees are not covered. Only explicit guarantees. Which guarantees? Which are written, clear written promise on paper that if something wrong happens, I am there. I will compensate for each and every money that you are going to lose. Only such kind of guarantees are covered in what? Corporate guarantees. Okay. So now what should be the safe harbor in this? The safe harbor in this is, let's read from the color book, because here there is a reference of what? Two separate clauses. In here I have mentioned that clauses, what exactly is written in clause A and clause B. Providing corporate guarantee where the amount guaranteed does not exceed how much? 100 crore. What is the commission or fee you will charge? At least 1% of the guaranteed amount. Okay. Are you clear? But second point comes with a condition. If it exceeds 100 crore, then when safe harbor rule is applicable? If, pay attention please, up to 100 crore, no condition is required. More than 100 crore, the other person should have a credit rating. Should have a, done by whom? An agency which is registered with SEBI and is of adequate to highest safety. Adequate to highest. Adequate means what? At least some safety has to be there. To highest safety. These are the words which are used in the original law also. Okay. As per SEBI, it has to be at least little bit safe to highest safety. Who should be little bit safe to highest safety? The person to whom we are giving what? Guarantee. If the amount of guarantee is more than 100 crore. If it is up to 100 crore, don't need to check any safety. Even if they don't have any rating, it's okay. Okay. Only 1% of the guaranteed amount will be the commission in both the cases. So what is not covered over here? What is not covered over here is if the guarantee amount is more than 100 crore and if the person to whom we are guarantee does not have any rating or safety as per SEBI standards. Are you clear? That will not get covered over here. Is it clear? Point number 7 now. Provision of contract research and development, software development. You have got a contract of what? Developing a software. How much margin you should show? Now the things are very simple. Underline 24%. If the transaction value is up to 300 crore. Above 300 crore, no safe harbor. OP upon OC formula is same. Obviously, that formula, that definition of operating cost, that definition of operating revenue is for entire safe harbor rule. Okay, that is the reason we have seen with the first safe harbor only. Next one is also same margin, same transaction value. Only one place they have mentioned aggregator, please. Which is that one place? IT enabled software development services, correct? Next one, provision of contract research and development, generic pharma drugs. What do I mean by generic pharma drugs? Don't see the book, please, even though it is defined in the safe harbor rule. What do I mean by generic pharma drug? Yes? What? I didn't, over the counter means? No, without prescription is not called as generic pharma drug. In India, you get everything without prescription. Okay. In India, you get everything without prescription in a medical store. Okay. Yes or no? What is generic? Yes. Vakdeva, you are saying something? Please say. Anybody? Nobody knows? Yes, please. Medicine for heart disease. No, not necessary. You don't know anything about generic pharma drugs. It is so famous. It is nothing but a cheaper version of a branded company medicine. Suppose Cipla is selling a medicine for 400 rupees. Then Cipla has sold the rights of that to certain small companies across the country. They make that same medicine with slightly cheaper material, cheaper quality of material, and sell them for 50 rupees, 60 rupees, 80 rupees. Those are called as what? Generic medicine. Generic means for which there is some other medicine, which is the original one. They have copied from there officially. Officially, they have copied. Okay. Any medicine for which they have themselves not done research and development. Okay. And somebody else has taken their patent. With same dose they are using, same strength, everything is same. The quality of material is different. Those medicines are called as generic pharma drug. Let's see the definition as per the safe harbor rule. It is comparable to approved drug. Comparable to approved drug. See, I have suppose sneezing or I have a cough. There are so many medicines which are available. Yes, some is available for 600 rupees. Some is even available for 60 rupees. Some is even available for 30 rupees. Oh, all those cheap medicines are generally generic pharmaceutical drugs. It is allowed as per Indian Medical Association. If a person is poor, what will he do? He is not able to buy 600 rupees medicine. What will he do? At least he will buy a generic medicine, yes or no, for his survival. So, but if you have money, doctors generally recommend don't use that. Okay. If you have money, then you should take the branded one only. Obviously, the quality of materials which are used in generic pharmaceutical drugs are not that good as compared to what it is used in the original drugs. If you don't have money, rather than not having any dose, it is better to have the generic pharmaceutical drugs. Okay. Comparable to approved drug in a dosage form, strength, administration route, quality, performance, intended use. So it is said that you can use it. Even many doctors recommend that. Okay. Many doctors have a racket of this. They have their own generic medicine pharmaceutical factory. Okay. They will prescribe only that only. They will not say eat Tepla. Don't eat Ranbaxy. C. Take what? Take our generic medicine drugs. Because they have a commission in that. They have a profit sharing in that. Anyways. If you are engaged in that, what should be your safe harbor? The safe harbor is same 24% operating profit upon operating cost. If the transaction value is up to how much? 300 crore. Above 300 crore, this rule is not applicable for them. Okay. Next one, underline. Manufacture, export of circle, core auto components. Core. What is core auto components? What is core? Important. Name na some important auto components. What? Handle. Tell me please. Engine, steering, brakes. Correct? Then see. Let's not check, please. Engine and engine parts, piston rings, engine valves, cooling system, powertrain components, transmission, steering, gears, wheel, steering system, axles, clutches, suspension, braking assemblies, brake linings, shock absorbers, leaf springs, lithium ion batteries for electric on hybrid vehicle that they have added very recently. Okay, earlier it was not there in 2018. So lithium ion batteries they have inserted now for electric and what? Hybrid vehicles. If you are engaged in manufacturing and export of that, that will also be considered to be part of safe harbor rule. Okay. So for core auto component, the safe harbor is 12% margin without any transaction limit. Check, please. And for non-core, it is 8.5%. How much? 8.5% without any limit. Sir, what is non-core? They have defined non-core. Non-core is something which is not core. That's it. It is defined in the original definition. Okay. I have not mentioned in the color book unnecessarily waste of space. But in the textbook, it is there. You can check it. What is non-core? Now, one last one is there. Before I move ahead with the last one, I want you all to first of all remember all of them. What you have to see, the nature of transaction. You have to see where the transaction limit is there. Okay. You have to see what is the safe harbor everywhere. Somewhere it is OP upon OC. Somewhere it is interest plus. Yes. Somewhere it is commission. Yes. Somewhere it is OP upon OC along with employee cost upon total cost. Yes. You have to segregate all the transactions into these four categories. Please by heart. Even if you remember this page, this entire box, that is sufficient for you in safe harbor rule. You will be only tested with this, with two definitions like advance, intra-group advance and corporate guarantee. Those two definitions at least you should do. Pay attention, please. One last service. Please see here. Stop talking. Point number 11. Receipt of low value adding intra-group services. Now, what are intra-group services? Intra-group services, that too, it has to be low value adding, not high value adding. Some small services they are talking about. Okay. Put in the box over here. Low value adding services. The entire value of this transaction, pay attention. If there is a low value adding services, the entire value, if you want to come in safe harbor, the entire value of the transaction should be up to 10 crore. How much? And the markup cannot be more than 5%. How much? 5%. Suppose the cost of the service is 9 crore and the markup is 20 lakhs. How much? 20 lakhs. Then it is considered to be part of this particular safe harbor. But if the cost is 9 crore and if the markup is 80 lakhs, how much? 80 lakhs. Now the markup is exceeding what? 5%. Therefore, you are out of safe harbor. You need to fulfill two conditions. The entire value of the transaction should be how much? 10 crore. In that, the markup should be how much? Up to 5%. Okay. It can be less than or up to 5%. The markup which is charged should not be more than 5%. Okay. Yes, if the markup is 3%, but the transaction value is 11 crore, you are out of this particular safe harbor. If the markup is 8% and the transaction value is 9 crore, then also you are out of this particular section. Okay. So the cost plus markup, including both of them, should be up to 10 crore and markup should be 5%. Check it, please. Right hand side. The entire value of the international transaction, underline including the markup, not exceeding 5%. Does not exceed a sum of how much? 10 crore rupees. Are you clear? Now wait. What will cost include? What will cost include? Correct? See the paragraph below. Again, not very important, but you have to understand it properly. Provided that the method of put in the box cost pooling. Cost pooling means how the cost has been pooled together. Which all items are there in the cost? Comma. The exclusion of shareholder cost, I'm coming to this. And the duplicate cost, underline, I'm coming to this. What do you mean by shareholder cost and duplicate cost? From the cost pool and reasonableness of allocation keys used for allocation of cost to the assessee by the overseas enterprise is certified by, put in the box, by an accountant. Okay. Now pay attention on the board, please. Page number 44.29 will tell you what comes in low value adding intra-group services. First of all, you have to tell me, are we receiving the services or are we giving the service? We are receiving the service. Okay. So who is bearing the cost? Who is incurring the cost? Sorry. Who is incurring? Who is charging us the bill? Who is sending the invoice to us? Non-resident associate enterprise. Correct? Yes or no? So they will have the invoice breakup. Markup is how much and cost is how much? Louder. Yes. You have to get it certified that from an accountant. From whom? From an accountant. That accountant will tell you what is the markup, what is the cost, is it as per the safe harbor rules or not. Are you clear? We will see who can be accountant. Okay, the definition of accountant is also given over here because the accountant is not in India. Accountant is where? Outside India. Correct? Who shall be the accountant? What should be his qualification for the purpose of doing this? First of all, let's see. What do you mean by low value adding intra-group services? It means the services that are performed by one or more members of the multinational group on behalf of one or more other members of the same multinational group and which are in the nature of underline what services? Support services. These are not main services. They are not doing a research and development for us. It's a low value adding service. Correct or not? Which are not part of what? Point number 2, core business of the multinational group. That is, such services neither constitute profit earning activities nor contribute to economically significant activities of the multinational group. Not in the nature of, put in the box. Put in the box, technical word it is. Not in the nature of what? Shareholder services. Or what do I mean by shareholder services? Any services which are in relation to providing services to shareholder. For example, I told my associate enterprise, I want to keep one board meeting in your office, please. Okay. He said that 20 lakh rupees expense. Okay. I said I'll give you. Okay. Do please. Keep the board meeting over there. Okay. It is a kind of what? Shareholder services given by our associate enterprise to us. Put a star mark over there. It is not defined anywhere in the law. What is shareholder services? It's a general term used in industry. Put a star mark towards what? Shareholder services. Write down over there. If the associate enterprise keeps a board meeting on behalf of us, keeps a board meeting on behalf of us, or keeps an AGM on behalf of us, then the payment that we are making will be called as payment for shareholder services. Similarly, there is one more technical term over there. What is that? Duplicate service. Sir, what is duplicate service? Pay attention. Any service that we receive generally from our local vendor. Okay. What? We receive that services from our local vendor. Now we are receiving that same service from whom? From our associate enterprise. Almost same. No difference. Such services are called as what? Duplicate services. Put a star mark over there and write down. If an entity in India receives a service from a vendor, and the same service is also provided by associate enterprise, then it will be termed as duplicate services. You will find all these analysis in the OECD's transfer pricing guidelines. You will not get anywhere in India. All these definitions also you will not find anywhere. It is not even there in ICI material, not even there in ICI's guidance note of transfer pricing also. All these examples we have taken from the transfer pricing guidelines of the OECD. OECD has given separate guidelines for transfer pricing. Next one, what we are learning, what includes low value adding services, what it does not include. See, both the things are given together in all the points. Some points are included, some points are not included. Check please properly. Yes or no, like first one is low value adding service. Correct? Next, which are neither require the unique intangibles nor lead to creation of unique what? Value intangibles. So there is no sharing of what? Patent, etc. between both of us. If that is the case, then that is not low value adding service. Then that will be considered to be a very high value adding services. Neither involve the assumption or control of significant risk by service provider. There is no significant risk to the service provider in providing these services. Nor give rise to creation of significant risk to the service provider. So the risk has to be very minimal. As the name itself suggests, it's a very low value adding services. do not have any reliable external comparable services that can be used for determining their arm's length right, but does not include the following service definitely. You check these services, all of them are very simple terminology, all of them are not low value adding. These are some significant part of your business, please. First one, what are you doing? Research and development cannot be called as low value adding services. Manufacturing cannot be called as low value adding service. IT enabled service. All these are separately mentioned in what? Safe harbor rules. Yes or no? KPO service, BPO service. You are purchasing activities of raw material and other that are used in manufacturing. You are doing sales, marketing, distribution, financial transactions, extraction, exploration, processing of natural resources, insurance and reinsurance. So it will not include low value adding services, will not include these services. Okay. Some small services, that too, if the transaction value is up to how much? Up to 10 crore, you will be markup up to 5%. Then you can come under safe harbor rule. So you have to determine the cost first, then a markup. Who will determine the cost? That will be certified by, check, by an accountant. Who will be the accountant? Okay. That is the first definition, obviously, because it starts with A. First definition. Accountant means what? Means an accountant referred to in explanation below. Subsection 2 of section 288 of the Act. That is, we chartered accountants. First of all, they have mentioned us. Okay. Can we have a practice outside India also? Tell me. Why not? And includes any person recognized for undertaking cost certification by the government of the country where associate enterprise is registered or incorporated or any of its agency who fulfills the following condition. See, for an Indian chartered accountant, there is no condition. Okay. If an Indian chartered accountant is certifying, we will accept that. But if a foreign accountant is certifying, we want that accountant to fulfill certain condition. Check point number 1. If he is a member or partner, louder now, in any entity, it means he is a partner. He is not a sole proprietor. Correct? He is a partner in any entity. Engage in what? Accountancy or valuation services. Then the entity or its affiliates, underline, have presence in more than 2 countries. What? That entity should be present in at least more than 2 countries. They should have a presence. They should have an office in at least more than 2 countries. And the annual receipts, the annual receipt of the entity in the preceding year should exceed 10 crore rupees. Check please. Only such accountant will be certified to certify this low value adding services are within the limits or not. If the person is practicing individually, yes, then check the limits are lesser. Then his annual receipt should exceed how much? And he should have an experience of at least how many years? 10 years. Okay. Only such accountant certification we will consider. So, how many safe harbor rules we have seen so far? What was the first one? Provision of software development services. What is the safe harbor there? 17%. If the transaction value is up to 100 crore. What about that? 18% if the transaction value is up to 300 crores. What is the second safe harbor rule? IT development services. What is the safe harbor over there? Same it is, but they are just using the word aggregate. Okay. Third one, knowledge process outsourcing. What is the transaction value over there? Transaction value is there. In KPO, is there any transaction value? Transaction value is there or not? That's what I am asking. How much? How much? Up to 300 crore. First transaction value is there. 3 parameters is there in KPO. What is the second? Now, wait. Transaction value is common for everybody. What is the first point? What is the margin? Margin. 24%. When the employee cost is? It is 60% or more, not less than. Okay, less than will come afterwards. Second point. Correct. When the employee cost is 60% or more. Second case, it reduces, margin reduces to how much? 21%. What is the employee cost should be? Less than 60, greater than equal to 40. Correct. And third, what is the margin? 18%. What should be the employee cost? Less than equal to 40. Exact 40 is getting tied between second and third. Yes or no? So wherever you want to take, you can take. Okay. Take in the third one. That's it. Okay. 18% margin. What is the fourth service? Intra-group loan in Indian currency. Correct. What is intra-group loan? When you give a loan to non-resident associate enterprise. Correct. And they should not be banking industry and financial institutions, etc. Yes, excellent. Now we need to take what? Which rate? SBI MCLR plus what? 1.5, 1.75. Then I also don't remember what is there in the bracket. Okay, forget about that. What was the rating, if you can tell? You remember? Huh? For how many days? How many days you will remember? That's what I'm asking. For today. Okay. Yes. On the day of examination, if you can read and remember for one day, that is sufficient enough. Okay. So first is 1.75% for all A categories are there. Then next rating is 3.25%. All B categories are there. Triple B's. Great. Third one is 4.75%. Only three categories are there here. Fourth one is also there. Correct. Where there is no rating. Correct. Yes, so and the transaction value is up to 6.5 categories there. I also don't remember. Sorry, I have to revise. I have not put emphasis on this. 1.75 triple A to A. 3. It is increasing by how much everywhere? Okay, 1.5 it is increasing. Last one is reduced by 2. Correct? Triple A to A, triple B minus, triple B plus, BB to B, C to D. No rating, loans are less than equal to 100 crore. Okay, now I'll remember. Next is when you give intra-group loan in foreign currency, now you have two categories. Up to 250 crore and about 250 crore. Correct? You have to take which rate? Sonia you have to take. Right? Sora you have to take. Correct? Euro interbank offer trade you have to take. You have to take all those rates depending upon the currency. Okay. So reference rate, we assume that they will give in the exam. Okay. If they don't give, then you are gone. Okay. Even though they have given the definition of reference rate in the study material also. Reference rate up to 250 crore. So now it is starting from how much percentage? 1.5. Then 3. Then 4. Only 3 category. What are the ratings? I don't remember. Huh? You only have to say. All A category. Next one. All triple B's. Third one. Remaining. All of them have rating or there is no rating case? No rating case is there here? Sure. Okay. Now above 150 crores. 250 crores. First one is 1.5. Then it is increasing by 1.5 everywhere. 3, 4.5 and 6. Correct? Coming to the next one, very important, which they have tested a lot of time in the exam, corporate guarantee. What do you mean by corporate guarantee? No. First, it is given to him. Whom? Only to? Only on subsidiary, which are non-resident. Correct? And it has to be explicit guarantee, not implicit, not performance guarantee. Correct or not? All these things should not be there. Letter of comfort, not covered. Okay? How much percentage? 1%. What is the transaction value? Up to 100 crore, no issue. Above 100 crore, it needs to have a credit rating of adequate to safety as per SEBI standards. Yes or no? What is the next one? Contract research and development for software development. How much margin? 24%. Next one. Generic pharmaceutical drug contract manufacturing. How much? Same 24% margin. For auto component manufacturing and export. How much? 12%. Non-core, 8.5%. Okay. And last, low value adding services receipt. Up to 10 crore, the markup should be up to 5%. Okay. Now, let's go ahead with some procedural aspects now. I don't think so. They should ask you the procedures, that how to fill a form, etc. But yes, they have kept it in the study material, so we have to go through it. It's easy. There is nothing great in that. One thing I would like to say, please pay attention. And that is this an option? Yes. I opted for this option. Okay. Then the officer will not ask, will not question my price. Yes. But you have to still follow 92D and 92E, please. Okay. Are you clear? You have to maintain all the documents and file form 3CB, list down all the transactions. Okay. Check it, please. You will not be relieved from this. Now procedure. Shall we see? It's easy, nothing great as such, but just remember once, understand once and leave it. Don't try to by heart it. Okay. Rule 10 TE tells us the procedure by when you should make an application. Okay. By then when they will accept the option. They may accept, they may not accept. Okay. That is their choice. Because they should also feel now the transaction which you are doing is software development service. What if in their eyes it is not software development service then? What if in their eyes it is not corporate guarantee then? Are you clear or not? So let's read the procedure now, step by step, point by point, not be in a hurry. File form CEFA, 3 CEFA is the form number. Okay. What is this? This is the form number to exercise the option of safe harbor. You have to give this form to the AO by the due date of return for a single year or multi-year first assessment year. Return must be filed by form CEFA date. I have done everything in shortcut. Okay. I will explain you everything. You have two options to file safe harbor. Either you can file safe harbor for 1 year. How many years? Or you can say that I want for 2 years or 3 years. Maximum you can say file safe harbor for how many years? Tell me now please. 3 years. So if you are filing for 1 year, then you have to give by due date of filing of return for the first year. If you are filing for multiple years, then you have to give by due date of filing of return of the first assessment year. Is it clear? You will give that form to whom? To the assessing officer. Checkpoint number 1, please. In second year, you cannot say, last year I have filed, please extend now. Then you have to again file a separate form. Okay. In second year, you can file for multiple years. Okay. From second year onwards, you can take for 2-3 years. Maximum 3 years, that form is valid. Option is valid for a period. Valid for how much time? Please pay attention. The moment I say it is not important, you're not paying attention, you're not responding also. It is very important. If you don't read this properly, you will not be able to write the exam. Your hand will not work in the exam. This is my curse. This is my curse. Now pay attention. If you are not able to write exam in the month of May, you just remember that one day sir was saying this, that if you don't pay attention in the procedure of safe harbor, that is the reason I am not able to write today. Recall that this day. Now pay attention. Option will be valid for the period in form CEFA or maximum how many years? Whichever is less. The officer will say, no, not for 3 years. I will only allow you for how many years? 2 years. Then 2 years. The officer will say, no, only 1 year. I will not allow you for 3 years. Then only 1 year. Like if this year, if anybody is making application, now this year, they are not allowing for 3 years. Because new income tax law is coming. Correct? They are saying we will allow only for next year. Next year you come again in the new law. Are you clear or not? We don't know what will be the safe harbor rules next year. Okay. Submit statement to AO before return for subsequent years detailing transaction value, margin rates. You have to give all the details. Okay, what is your margin, etc. You have to give. Don't give the margin more than what is mentioned. What is mentioned in the safe harbor, it will get rejected there only. You have to show less than 17, less than 18, less than 24, less than 12, less than 18 and a half. Are you clear or not? or at least that much, not more than that. Your margin should be only that much. If it is held invalid, invalid if the TPO or the commissioner rules invalid or the assessee opt out via declaration to AO. There are three ways in which the option can be invalid. Okay. Either the TPO can say invalid in sub rule 11. We will talk about sub rule 11 in a while. Or commissioner can say that the option is what? Invalid. Even assessee has an option to opt out of the safe harbor rule after filing the application. Are you clear? You have an option. Once you make an application to the AO, what AO will do? All those national time pass. He will what? Verify whether you are eligible assessee or not. Eligible assessee means what? Whether you are doing that proper business or not. Whether your transaction is what? Eligible or not. AO will refer to TPO. If he doubts about what? Validity of your eligibility. If he doubts that you are not a eligible assessee or you are not doing what? Eligible trans. You are not coming in the definition of what? Software development services, KPO. Are you clear? Then he will refer the matter to whom? TPO. Your matter will go to TPO. TPO may request documents to you. You have to submit the documents to TPO within specified time. Now wait. Understand the procedure till here. AC की खुशी में बंद किया. बंद करना है तो बंद करो. Switch on the fan. See here. Till point number 5, what has happened? Tell me. We have made an application in Form 3 SEFA. To whom? By when? Till when you will fill the form? Till the due date of return. For multiple year, 1 year you can file. They will accept. Maximum they will accept for 3 years. The form has gone to the officer. Okay. Now the officer will check what? Validity, etc. of that. Okay. Yes or no? If the officer finds the form to be what? Invalid, eligible, not eligible transaction. Okay. If he has doubt, what he will do? He will refer the matter to TPO, will check the things. TPO is now asking you the documents and information. Okay. Shall we go ahead? If the TPO declares option what? Invalid by order. If no information is provided. Okay. If you don't provide information, TPO will declare the option as what? Invalid, and transfer pricing provisions will apply on you, obviously. Or if the assessee is ineligible or if the transaction is ineligible, he will declare the option invalid in 3 cases. If you don't give information, then obviously he will declare invalid. Or if you have given information, but if he feels that you are ineligible or your transaction is opportunity of being heard will be given to you. Okay. You are not happy with TP order? Tell me now. Then you will object to whom? Commissioner within 15 days. Can you see this? You can file an appeal to commissioner. Okay. It's not an appeal actually. It's an objection. Okay. It's not CIT appeal. It is commissioner. CIT. Is it clear? Then the commissioner will do that national time pass. What? Opportunity of being heard. He will pass orders on what? Validity, whether it is valid, invalid, and send the copy to whom? Assessee and the AO. If valid, the AO checks compliance with Rule 10 TD, sub Rule 2A. This is Rule 10 TD, sub Rule 2A. Okay. This is 10 TD. You can check the heading also. Is it clear? Sub Rule 2A. Is it clear? He will check the compliance with this, whether it is within the margin or not, etc. Shall I go ahead? Apply specified margin rates. If non-compliant, he will apply the specified margin and he will give you the safe harbor. If circumstances change, then AO refers to TPO. What do I mean by circumstances change? When you made an application, that time you are doing software development services. Yes. For the next 3 years, you are making an application, correct? Suppose in the next year, your nature of service is changing. Can it change? Yes or no? Yes. The TPO orders on the validity for the relevant year after hearing. Again, the TPO will refer the case and TPO will check whether actually the assessee is doing international transaction or not properly. Then again, the AO may refer non-eligible transaction under 92 CA. If no option or invalid, then arm's length price will be set as per 92C. How it will be set? As per the regular provision. 92C, 92CA, ignoring what? Rule 10DD, margin and rates. We will not accept the margin of 20% or interest rate of Rule 10DD. Okay. So this last few points are for subsequent years. If circumstances change in future. Especially when you make application for 3 years, we don't know what will be the circumstance in the next year. Whether the nature of transaction will remain same in the next year, I am not sure about it. If it changes, then the officer will reject your application, will reject your option and will throw you to what? The normal provisions of the Income Tax Act. So the procedure is very simple. You make an application to AO. There is no separate fees and all for this. Nothing is to be paid. Okay, it's free of cost. Make an application. Once you make an application, the officer will either accept or reject. If he rejects, if he has doubt, he will go to TPO. If the TPO passes the order and it has been valid, you can go to what? The commissioner. Is it clear? That this is the procedure that you have to follow. That's it. Now, last two things which are there in this part of Safe Harbor. Mark down. This is very important. They used to test lot of questions on this in the exam earlier, even though it's a small point. But they used to test questions based on this in the examination earlier. Safe harbor rule will not apply in some cases if you do transaction with a person located in NJA. With whom? Tell me. With whom? Like Cyprus. Correct? Example. Cyprus is not an NJA today, but still hypothetical. So if you do transaction with a person located in NJA, safe harbor rule is they used to test this example again and again in the exam. Please. Or circle. Or no or low tax jurisdiction. Okay. So you will ask me, what is no tax? So is very simple. What is low tax jurisdiction? That is defined. That is also important point. Please don't forget. Where maximum rate is less than 15%. How much? If any country whose maximum tax rate is how much? It is less than 15%. That country will be called as what? Just write down below the provision only. You don't have to come here again and again. Okay. You can see the official definition from the Bear Act, where the maximum rate is less than 15%. These 2 points are extremely important academically, I am telling, please. So I am summing up now what is relevant academically. If you do that much, that is sufficient in safe harbor rule for your exam at least. One last point is there. Please read, it is self-explanatory. If safe harbor rule is accepted, you cannot go for mutual agreement procedure between two nations, okay, to solve your issues. Is it clear? MAP proceedings will be closed, just like, write down over there, just like rollback provisions. Remember, even in rollback, you cannot go for rollback if MAP proceedings are initiated, or if rollback is initiated, you cannot go for MAP. Correct? Now, one final time, I am saying what all things you have to remember. You have to remember all the rates, this entire box, academically. This is extremely important. Okay? Then, this rule, this is important. This note. This not much important. This is important. NJN and no tax jurisdiction. NJ provision in itself is also important, even though it does not have any practical importance. In definitions, intra-group loan, generic pharma drug, corporate guarantee, core auto component, and all these things they have never asked. Low tax, I've already told you, correct? Low value adding services also they have not asked ever. Yes, at least remember these things on the day of examination. While studying, you can study everything, but during the examination, at least try to remember these many things, please. Okay. Now coming back to the main section, 92 CB. See on the board, please. Please stop talking. Now the next thing we have done for Jan 26. So Jan 26 students should not see all these things. Anyways, I'm not going to upload that. I'm going to cut from here. Okay. Okay, that you can watch from your YouTube video. We have uploaded that on YouTube last attempt. Jan 26 students, your discussion is done, which is relevant for your exams.